Welcome back, investors, to Ticker Time News. I'm Adam, and here we are for another market close live stream. Well, it's official. We have our CPI data. We know what inflation looks like. It came in a little hot, not too much, almost meeting expectations, but we still have inflation. The inflation reading was still up. So we're going to get into that. There's a few stocks I want to cover, like Apple, and potentially cutting back on some of their iPhone numbers that they're going to have manufactured, delivered. We're also going to talk about a couple of surprising stocks, some areas where I think the market is primed and ready to go. So that's going to be in our playbook to share with you. And of course, the most important thing is you. Communicating with you is the most important thing of this show. If you have a question, leave the ticker symbol and your question in the comments, and we will go over that company live during the broadcast. We'll look at the stock chart, we'll look at financials, and figure out what the company's up to and whether the technicals look good or bad for the company, either or, but we'll talk about it together and have a conversation. In doing this show, the most important thing, what I like the most, is providing value for you. So this show is not for me. This show is for you, the watcher. So even if you don't have a ticker and you just have a question, go ahead and ask. This show is for you. So ask your questions. Now, without any further ado, we're going to talk about what I saw in the market today for the most part, and inflation. So the S&P 500 snapped a 3-day losing streak, hallelujah, and the NASDAQ also advanced a little over 0.5%. These gains were boosted in tech shares as yields declined following higher than expected inflation figures. U.S. annual and monthly inflation rose in September by more than the forecast, while core figures matched expectations. And I have the CPI data right here. I've gone through it. I've highlighted some things that I thought were interesting, some numbers that were high, some numbers that were low. But we also had the minutes of the Federal Reserve's latest policy meeting, and it did shake markets a little bit after showing officials broadly agreed to start tapering emergency pandemic support, not the overall tapering, but the emergency support, maybe in mid-November or mid-December, and that process could conclude around mid-2022. As expected by some market participants. Officials also stressed that if the economic recovery remained broadly on track, a gradual tapering process that would conclude around the middle of next year would likely be appropriate. On the earnings front, we had earnings kick off with JP Morgan topping their forecast. Now, the key takeaways from the CPI report was the year-over-year figures, which showed persistent inflation pressures. So all the talk all summer long about inflation will be transitory. Well, inflation has not turned out to be so transitory, which just means short-termed. It seems like inflation is going to be a longer-term battle that we're going to have to fight, unless you're Kathy Wood, which she believes deflation is the real risk that we have to watch out for. So the total CPI was up 5.4% versus 5.3% in August, and core CPI held steady at a lofty 4%. This is a 13-year high for inflation. Indexes like food up 0.9% and shelter up 0.4% accounted for more than half of all items that increased. The index for food at home jumped 1.2% after increasing only 0.4% in August. The energy index increased 1.3% after increasing 2% in August. Surprising to see that down a little bit. The gasoline index was up 1.2% versus 2.8% in August. Again, I was shocked to see these numbers down specifically. I mean, we've had oil up over $80, excuse me, over $80 a barrel here recently. But again, these readings are for September. When October readings come in, maybe oil spikes because we're seeing those $80+ barrel figures. So again, remember, these numbers are for September, so we are halfway through October already. The new vehicles index increased 1.3%, while the used cars and truck index actually fell 0.7%. The index for owner's equivalent rent increased 0.4%. So that's the main things that I saw in the CPI data and about inflation. What did you think about the inflation numbers that came out today? Let me know in the comments. We can talk about it. Now, there were some pretty hot spots in the market today, and being able to find those, point them out, and take advantage of them, well, that will leave you in the green more often than in the red. So let's talk about a few of the hot spots in the market. There were some pockets of strength, like solar, and that we're going to look at that. The ETF for solar is TAN, T-A-N. And if you look at this ETF, it had a mighty breakout over the past few days. So it had been forming a symmetrical triangle. And usually these are very bullish technical developments. Now, it was trading below, and just to point out, this is a daily look on the chart. So every single candle on here represents one day. So you can see over the past 1 to 3 days, this ETF has shot up and at a pretty good pace. We can actually measure this. If we go from this bottom right here, 5 trading days ago, to where it closed out today, that was a 16.6% increase in this ETF. 16% in a few trading days. Solar has been one of the main segments in the industry that has actually been moving forward and gaining ground over the past several trading days. When we get to the segment of going over the big winners and big losers for the day, we have seen that solar has consistently stayed in the winner side of the category from the past several days. And that's represented in this one ETF. And the reason why I like to use ETFs is because they are a great reading for a segment in the market. Doesn't always work out, because you could have a solar company that maybe didn't have great earnings, didn't do very good. They drop right down, but everyone else did wonderful. So you may have owned that one solar company that dropped, and you may feel that, well, solar is not a good investment. So use the ETFs to kind of give you a macro view of the sector. And that's what I do. And then you can find individual stocks if you want to take that risk for an individual stock. Of course, the more risk you take, the greater the reward can be. But of course, the greater the risk, the greater the risk. But anyways, over 16% in the past several trading days here. And again, this is the solar ETF, ticker symbol TAN, T-A-N. Again, this symmetrical triangle pattern, it's very bullish. Usually once it breaks out, it will stay above that. And a lot of times when it breaks out of this when it breaks out of this, it'll actually gap up. And I don't think there was a gap up here. It looks like the candlesticks, the wicks on the candlesticks, they kind of line up pretty close to each other. But it was a pretty good move up, at least a percentage point. So that was the TAN again. That was the solar index. Another index that has been doing really good is uranium. And a good index to follow is URA. And that's the Global X Uranium ETF. And you can see here, the past 2 days, it has shot up. Big, strong momentum on this move. And if we measure this, we'll go back 2 days, measure from the bottom to the top where it is right now. And you can see that's a 24% move in the past couple of days. This ticker symbol or ETF, ticker symbol is URA again. They were up 6.8% today. But over the past couple of days, they're up 24.27%. So another big gainer in the market today. And this is covering uranium. So solar is doing great. Uranium is doing great. Just a few ideas here for you. We also have renewable energy. Now there's 2 ETFs that we can use for this. One of them is ticker symbol ICLN. N. And it's the iShares S&P Global Clean Energy Index Fund. And they were up 3.2% today. And you can see over the past couple of days, they've gone up nicely. And let's measure that. So we've got the solar energy. They were up over 16%. Uranium was up over 24%. If we go back 1, 2, 3, 4, 5 trading days, and if we measure top to where we are right now, that's a 10% gain right there. So that's why, again, I like using the ETFs. They give me an idea of how the sector is doing, how the sector is performing. And, you can go from there to find individual stocks that are performing the best. Or just keep the ETF and keep a basket of companies and do well with those as well. So that's 3. Oh, I said there were 2 for clean energy. The other ticker symbol is ACES. ACES is the ticker symbol, and it's Ace Hardware Indonesia. No, sorry, wrong one. Alps. I was looking at the wrong one. Alps Clean Energy ETF. Ticker symbol is ACES, ACES. And you want to make sure you get the ETF here. Now, if we measure this one, it has done just as well as the last ticker symbol that we looked at, which was ICLN. And again, this one is ACES, ACES. We go back 1, 2, 3, 4, 5 days like the last one, and we measure the bottom to where we are right now. Right there. That's a 13.16% move to the upside. So these have been hot spots in the market over the past couple of days. I love sharing this information with you guys. Hopefully it can help you in your investor journey. Something else to talk about, we have an overlooked stock or segment, if you want to call it. And the company is Smart Global, okay? The ticker symbol is SGH. Smart Global Holdings. This is the company that we want to look at. Now, over the past several months, almost this entire year, they've been range bound, trading up, down, sideways all year. If we look at a little more history on this company, They were range bound down here all of 2020 until October of 2020, and it went on a nice run. Now, here we are in October again, and this company was up 18% today. Why was it up 18% today? Well, let's talk about this, because this gap up, a huge gap up, there's a hole in the chart right here for today, and it was very interesting. We had 3 trend lines all converge today. The 21-day moving average, the 50-day moving average, and the 200-day moving average all converged in one spot. Okay? We have this giant green candle down here for volume, and we have earnings. Okay? We have earnings. They beat by 35%. The earnings per share came in at $2.16. Revenue came in beating expectations by 1.4% at $467.7 million. Now that shot the stock up, and it never looked back. It's got a very small, tiny wick on the top and this very large wick on the bottom. Again, this is the daily chart, so this is what happened in the total of today, from market open to market close. After hours right now, it's kind of flat. So let's talk about this company a little bit so you get a better understanding of what's happening and why I'm pointing this company out. Again, the company is Smart Global Holdings, okay? And what I would say was a lightning boost, okay, for this company after posting its largest EPS beat since going public 4 years ago. So this company hasn't been public very long, 4 years. So 4 years ago to today was the best ever, as well as continuing its robust revenue growth in Q4. They are in their fiscal year end right now. So their fiscal first quarter would be the typical fourth quarter of the year. So they're a little bit ahead when they're announcing their quarterly results. So this was their fourth quarter results, the end of August. And Smart Global also issued upside for Q1, which would be the November-December timeframe. So they up their guidance for what they expect the company to do. As a holding company, Smart Global owns brands that operate in 3 different markets. High performance computers, that's 1. LED technology, that's 2. And computer memory, that's 3. As a result, Smart Global targets a variety of end markets, including mobile and PC, which was 23% of fiscal year 21 revenue. Network and telecom, which was 11%. Servers and storage, 12%. AI and data analytics, 13%. Advanced lighting, 26%. And industrial and defense, 15%. With no end market making up more than a quarter of total revenue. Smart Global is well diversified. They have a long list of products, so if one isn't doing so good, they have a long list to help them sustain their growth. Now, and with their profile contributed towards giving the company a very bright quarter in what looks to be an even brighter future. Although its brands may not be as well known as those of NVIDIA, which also has a line of HPC offerings, Smart Global is winning contracts. much like Palantir, such as its $68 million contract with the Navy and Air Force awarded in Q4. Overall, Smart Global has become a shining star of late, bolstering its acquisition of Cree LED last year. The company's diversification is proving to be successful, and by targeting high growth end markets, Smart Global doesn't look set to become dull anytime soon. I think its innovations in LED technology, such as improving disinfection and purification, that's right, disinfection and purification, it's going to be big time for this company, Smart Global, with its UVC LEDs. This will help Smart Global maintain a solid competitive advantage. Finally, even after its big jump today, the stock still trades around 7.7 times forward earnings, which not only looks attractive given the past 2 quarters of growth, but which should also help limit the downside. So let's talk about the stock here a little bit on the chart. So again, this is a daily view of the chart. And if we go out a little further, okay, this is the stock's life. This is its history right here. When it went public down here at around $11, $12, it shot up to a high of around $56. Then it sold off, and let's see, this high right here, this first high was March of 2018. Then it sold off to hit a bottom in May of 19, and then had a nice run up all throughout 2019, and then fell in January of 20 and fell hard all the way down to the $16, $15 area. And then from March 2020 until October 2020, it really, once it caught up to the big fall, I mean, if we put a line right around this area right here and we cut that off, it's been kind of flat. But then from October all the way to the big hype of April of 2021, it was a rocket ship, almost up and to the right. That's something we could see from the company moving forward, because everything I talked about, the diversification this company has created for itself, you can see that every quarter, the past 3, including this one, today, a big spike up. Last quarter, big spike up. The quarter before that, big spike up. But every time, then the company sells off, right? Trade sideways. Big earnings, big pump. And then it sells off. Had a small one, sold off. Rallies, moved sideways, sold off. Big shoot up because of earnings. So when are investors finally going to realize the potential of this company? Smart Global is a smart investment. That's my opinion. Remember, this is for entertainment purposes only, and just my thoughts. Do your own due diligence, but this is a company that I would definitely look into. Again, it's Smart Global Holdings, ticker symbol SGH. All right, so let's move on from them. I do want to talk about Aapl. Aapl had a tough day, and that ticker symbol is AAPL. Now, even though Aapl had a tough day, it held up really well. I mean, only down 0.4 of a percentage points, that's not too bad for bad news, as iPhones maybe, and it wasn't even a guarantee. Maybe that's why the stock held up so well, is because it wasn't an absolute. It was just a possibility. So with Apple, again, this is the daily chart, so we can zoom in here to see Apple had a nice run from June, and then it peaked at the beginning of September, and it's been kind of selling off. It had a nice little rally, but it bumped into its 21-day moving average, and that's been acting as resistance. As the 200-day moving average is creeping up here, I think this is gonna keep this stock from going down too far. I think the 200-day moving average will definitely be a strong support level for Apple. But right now, it seems to be finding support around the $140 range, and it kind of bounces off of that up to $145, maybe $150 on a really good couple of runs, couple sessions in a row. But here's what happened with Apple today. It's trading lower on a Bloomberg report, and I have that Bloomberg report pulled up right here. And the report is indicating that the company is likely to slash its projected iPhone 13 production targets for 2021 by as many as 10 million units due to chip shortages. This chip shortage deal, it's real. The supply chain being broken, it's real, and it's affecting everyone. It's affecting all of us. So with this, the article also says that Broadcom, ticker symbol AVGO, and Texas Instruments, ticker symbol TXN, are struggling to deliver enough components for Apple. So the bottom line, this news is troubling to hear, though not totally unexpected based on Apple's July comments. I think that this is why the stock has held up so well today. I mean, it's still at $140 a share. Supply challenges are going to be the main theme for a lot of companies across many different industries this earnings season. So get used to it. I think that's a given. The main issue now surrounds their duration. Investors should understand that this is going to be a multi-quarter problem. So investors should not look for a quick fix. Even a stellar company like Apple is not immune from our supply chain issues. And that's the main point of the Apple rumor about the iPhone production getting cut. We have a supply chain problem. We have component chip. We have a products problem, not just a supply chain problem. Components for iPhones, for computers, for other cell phone manufacturers, for automobiles. Companies like Walmart, they're hiring their own cargo ships. Instead of going through a shipping company, they're doing it themselves, kind of like Amazon has done, to try to get their products where they need them the most. And there's no fast solution. Now, I don't know if I have it pulled up or not. Let me go and see if, here we go. All right, so I read this article earlier, but it's about the Biden administration confronts supply chain crisis stretching past his grip. So the White House, the administration, is trying to help solve the problem with the supply chain, but it's severely weakened right now. When you have all these ships on the West Coast just sitting out in the Pacific waiting to be unloaded, but you have nobody at the dock to unload the containers. You've got no truckers to drive the containers to where they are, and then you've got nobody at the store to unload the containers. There has been a mass resignation across the country where people are saying enough and they're leaving their jobs. I'm not sure how they're getting paid, how they're gonna, survive or whatnot, but you can only push people so far, and Americans have done a lot over the past year. And many of them are saying enough. Some of it may have to do with the mandate, which the mandate, quite frankly, it's not official yet. It's a proposal through OSHA, and it hasn't been even approved or written down yet. And whether OSHA can just write it down and say this is what needs to be done is questionable. It may take an act of Congress to do it. So there's something happening with our country, our economy, our supply chain, and it's just not looking too good. Even when the president tries to get involved here, it's not helping too much. I mean, it says pandemic-related transportation snarls clog U.S. ports, U.S. imports at record highs, retailers say they're stocked. Yeah, well, we'll see about that. Just the first little bit here, it says the Biden administration is trying to relieve supply chain bottlenecks ahead of the U.S. Christmas shopping season, but officials acknowledge their options are limited as soaring consumer demand tests transportation and delivery networks. Let's see, flotillas of cargo ships anchored off major ports and stacks of shipping containers piling up on wharfs have racketed up concern that American shoppers may be greeted by empty shelves when the holiday season kicks off next month. That's led the White House to accelerate and highlight its efforts to smooth the flow of goods through the economy. Earlier, the Port of LA, Los Angeles, which together with the nearby Long Beach port make up the busiest U.S. container hub, announced that it is moving to begin 24-hour, 7-day-a-week operation during discussions with the administration and labor unions, a step the White House called overdue. Yeah, way overdue. You would think with all these ships sitting out there, they would have done a 24-hour schedule a long time ago. But maybe they don't have the workforce to be able to cover a 24-hour a day operation, 6 companies, including FedEx and UPS, also committed to expanding their delivery schedules. Biden will meet with executives from those companies, ports, and labor leaders at the White House before his remarks. With the holidays coming up, you might be wondering if gifts you plan to buy will arrive on time, Biden said Wednesday, before reiterating the announcement from the port. This is the first key step for moving our entire freight transportation and logistical supply chain nationwide to a 24-hour system. It should have already been done so in a 24-hour system. But anyways, that's what we have at with the supply chain. Let's go back and touch on another company, and again, we were talking about Apple and their production possibility slowing down. Let's look at Plug Power, ticker symbol Plug, PLUG. Now, something special happened with Plug Power today. You can see that the past several days, 1, 2, 3, 4, 5 days, Plug Power has been unstoppable. If we measure this low to this high, where we are right now, we're looking at a 40% jump in the past several days. Why has Plug Power shot up so high, 40% in the last few days? Well, it's 12% run today in that big missing area right here, this big hole in the candlesticks. Well, that's because Morgan Stanley upgraded Plug Power to overweight from equal weight with a price target of $40, up from $35. So even with its 12% run today, its 40% run over the past several days, it has a price target of $40, so there's still room for this stock to run. Now, why did Morgan Stanley believe this stock should have been upgraded? Well, they believe Plug Power is well positioned to be a leader in the hydrogen economy. The firm says the company's upcoming Investor Day, which will be very important, is accelerating its growth. Legislative support and an attractive risk-reward profile drive the firm's upgrade to overweight, with the announcement of several strategic partnerships, $4 billion of cash on its balance sheet, accelerating revenue growth, and the potential for, quote, significant upside from legislative support. The firm believes Plug Power is well positioned at the outset of a significant transition point in energy, with the adoption and expansion of the use of green hydrogen. The firm believes green hydrogen will play a critical role in decarbonization, and that Plug Power is likely to increase its outlook at the upcoming Investor Day. So that's great news for Plug Power, and I think everything that Morgan Stanley said is accurate for Plug Power. If we take a peek at how it's performed this year, you can see it had a beautiful run up through 2020, and it maxed out at January of 21, sold off to a May 11th low, and then it's been trading sideways. So even though it popped 40% over the last few days, if we measure where we are right now to its all-time high, I mean, that's 128%. It's hard to believe the stock fell over 130%, but geez, it has a runway here if it had the same hype again to shoot up that high. So it's off 128% from its all-time high that was set back January 26th of this year, and that was $75.53 or $75.49. So yeah, Plug Power, it's got a future ahead of it, and right now it's at $33.80, and the upgrade calls for $40 even. So if we measure from where we are right now, we're at $33.80, and we go to $40. It's not much, but if we go to $40, you got another 20% potential on Plug Power there. So even though it shot up 40% in the past few days, there is still another 20% ahead of it. Let's see here. Just reading the comment here. I think you called the double bottom on Hyliion to a T. It's up like 20% since then. I am holding anyway. Cool. Good job. Yeah, we did the same thing with ChargePoint, actually. Excuse me. Let me just pull up here Hyliion. YMC. Oh, my apologies. My apologies. I said the wrong thing. All right. Let me just pull up ChargePoint. So the other day I was going through these charts because I'm researching ChargePoint to do a video on them, and I was researching ChargePoint, and when I got to their stock and I started doing some research here, I noticed they had this triple bottom over here on the left side of your screen, and then it had a nice rally, and then this falling wedge right here, it hit the bottom down here, and then it shot up and broke above it. And you can see the volume at the bottom of the screen is up higher than it was all throughout this time. It's higher than it was through the rally over here. You have to go all the way back to this triple bottom right here to find volume anywhere close to it. But anyways, we posted this the day before it broke out. You can go to our Twitter account or even our StockTwits account, and you can see this chart that we posted. But it broke out, and even though it's kind of flat today, it's sitting at $20. It's got resistance at, I think, $20.50. So it's going to be, it's going to need a little more momentum to push it any higher. But so we'll have to see where it goes from here. But we have a video coming out shortly, soon, talking about ChargePoint, because I think it's an interesting company. I think it's got a future ahead of it, much like some of the other companies we've been, like SoFi, we just did one on. Some of the winners today, lithium has been doing excellent. We've got Plug Power up here. They have shot up really good. Let's see who else we have. Marathon Digital, Hut 8 Mining, so cryptocurrency related stocks were both up 7%. CrowdStrike, they were up 7%. Oh, Toast, the payments processor, for restaurants. We did a video on Toast, and they're up 6.8% today to 54.43. Glad to see them moving. It was the stock you had looked at me for last. Yeah, okay. Oh, now I remember. Yeah, now I remember. Okay, good. Good. I'm glad that worked out. And if you have any other companies you want me to look at, just leave the ticker in question in the comments, and I will definitely look at it for you. That's what this stream is for. The rest of the stream is just me kind of babbling on about this or that, but the biggest thing is answering your questions. That's what I want to do. Okay, so glad to see Toast up. I think that's an excellent company. They do a lot of technology for restaurants, and the restaurant sector is so fragmented that Toast could have a real shot at becoming the restaurant go-to play for technology. They just went public a few weeks ago, and I love the company. Let's see who else we have. Skills was actually up 6%. Kathy Wood sold some of that. It's at $8.92. It just can't really get going these past few weeks. Let's see who else we have. Another lithium miner. This Lithium Americas, they were good yesterday. Fubo TV was up 5.5% to $27. Electric Last Mile Solutions, which does buses, bigger vehicles, they were up 5.5%. They're at $7. Let's see, who else do we have? Grayscale Bitcoin Trust up to $44. It was up 5%, doing good. Bitcoin's at 57,300 right now, so it's holding steady. It should accumulate a little longer, and then it'll take a run up, and it'll find resistance around the 59,000 to 60,000. And then after that, it's 75,000 for resistance on Bitcoin. But a lot of people are calling for 100K Bitcoin by the end of the year, so we'll see. Snowflake, it's been on a good run. It was up 4.7% today, $327. I mean, it was just like a month ago, this stock was sitting at $300, so it's been doing good. Hippo was up 4.7%, but it's still down low. It's at $4.41. GameStop had a 4.6% run today. The lithium battery ETF, ticker symbol LIT, was up 4.6% today. Like the ETFs that I was talking about at the beginning of the show, watch for these ETFs because they can really lead the way. Sometimes it's hard to pick which stock is going to do the best, so an ETF can really be a good way to lower risk but still catch a trend like lithium for you. Price target on Bitcoin for the end of the year. Okay, let me go look at this chart real quick for you. And I'll show you exactly where I think Bitcoin is going to go. All right, looks clean, and then all my lines pop up, and oh my goodness, it's tough to see anything unless you're the one who drew these lines. Okay, so Bitcoin has got a very defined price channel for it. And one thing that I like to do is watch these trend lines and these price lines as support and resistance. So this is a bigger overview for Bitcoin right now. And you see the trajectory. So if we zoom in here, now this is a daily chart. I like to use a daily chart for long term on Bitcoin. But right now, Bitcoin has found resistance at about the $57,800 level. I think it will consolidate here for a little while. I don't know what the short-term moves are going to be, but it'll consolidate here for a little while, and then it's going to go up to this, and then it's going to go up to this trend line. Let me pull this down a little bit. This trend line right here, and it's also a price line. Both of these are going to act as double resistance for Bitcoin. And again, that's around the $60,000 mark. I think it'll definitely get there. I think it'll probably consolidate around this $60,000 mark. And then once it breaks this mark, then I believe it's going to 75,000. Okay. Because that would be the next area of resistance for Bitcoin. And it's a trend line resistance at $75,000. If it can break that $75,000 area there, then it's got room to run really as high as it wants to. Okay. So we got I think a small little speed bump resistance right now where people are accumulating. and then we're going to have resistance at about 60,000, and then resistance at 75,000. If Bitcoin can break 75,000, then it's going to be a parabolic FOMO type of move as high as it wants to go. If you use the stock to flow model, well, that says $35,000 by Christmas or the end of the year. I think it can definitely do 75,000, but I guess that would be my price target, 75,000 by the end of the year. I think it's doable. Above that, it gets harder for me to visualize it, but that's not to say it can't. Bitcoin can definitely go. I mean, it's made parabolic moves before in the past, so it doesn't have to make sense. So that would be my price target, 75,000 by the end of the year. And again, it could go higher. I do love that stock to flow chart. He does a great job. Let me see if I can pull that up. I love looking at that. Just real quick. I think it's 135,000, I think is what they call for. But as far as me, I'm sticking at 75, and we'll see how well it can do from there. Let's see. Do you have a price target for where you think Bitcoin might go? Okay. I don't know why I don't have this. I don't know why I don't have this page bookmarked. Who knows? You're right. Who knows? It definitely doesn't. Yeah, Bitcoin. It does. The dollar amount for Bitcoin, it doesn't make sense to me a lot. I mean, I can see it as a value. I can see it as a store of value. I can understand some of the technology, and that's why I can see a store of value for it. But when people start talking about Bitcoin to 100K, 200K, $1 million a coin, I can't visualize that. I can't make sense of that. Like Plan B's stock to flow model, which I'm trying to pull up. I just can't find it. I should have it bookmarked, but I didn't. Oh well, I might just have to give it up. I mean, there's a I've got an image for let's see. I don't see why Bitcoin would be the default and not the other things. Well, here's the stock to flow, what I was talking about. And I wish I could pull up the website. But I mean, this thing has Bitcoin at $200,000 by the year 2024. And it's surprising how spot on that this has been. It's just crazy to me. I mean, he's been able to call this since 2010, 2011, when this was published, Bitcoin, these dots are all when Bitcoin closed for a month. So like, for example, the latest dot was when Bitcoin closed for September. But he's calling for over $100,000 per Bitcoin by the end of the year personally. And his stock to flow model is $100,000 right here. 2022. And he says that by 2022, at the end of the year, Bitcoin should never be below $100,000 again. And I just don't understand. I can't see that. But why is Bitcoin the default over the other coins? Stock to flow has been broadly correct, so I think it could easily be there. Yeah, I mean, stock to flow it's interesting. I love looking at it. But I can't imagine Bitcoin being, what's the top line? $1 million? I can't see it. But the underlying technology for Bitcoin, I think, is its scarcity and why Bitcoin is the biggest coin over other coins. But Ethereum, I think Ethereum could top Bitcoin's market cap because it's got so many more use cases. Could I imagine Bitcoin at 50,000? No. Back when it was at 3,000? No. Good point. Great point. I couldn't have imagined it then, but here we are. I would say, I wish as an investor would have invested more into Bitcoin back in, 2013 or something, but we can never do that, or we'll just end up having our feelings hurt all the time. You can't, don't worry about what you miss out on. Just be happy for what you've made. That's what I do. Yeah, we could have another tulip bubble in Bitcoin. If the with China banning Bitcoin, I mean, that scared a lot of people to sell out, but I think China is just going to make its own digital currency to try to topple the dollar. And then when the Fed comes out and makes its own coin, how will all that affect Bitcoin? But then again, the Fed coin and China's coin, it's still centralized while Bitcoin is decentralized. I don't know. It's definitely something for the future. One thing that, where was I going to? Coin market cap. One thing that cryptocurrency I think will be used for big time is the metaverse. I did a video talking about the metaverse probably a month ago now. And the metaverse is going to need some sort of monetary system. And I think that would be a good place for one of the cryptocurrencies, if not just Bitcoin, maybe Ethereum. I also like going here every day and seeing some of the crazy moves, like the Space Cowboy coin. It was up 3,524% today. That's just incredible. Incredible. There's always crypto coins that shoot up thousands of percent every day. It's fun to look at, but I don't invest in them because I don't want to lose 3,000% of my investment. All right. Let's see who else did good today. Redfin finally broke above $50 again today. They were at 4.4. Zoom is at 266. It was up 4.2% today. Let's see here. Roblox, talking about the metaverse, they were up 4.4% today to $74. AMD is still up over $100 at 109, up 3.9%. Workhorse finally picked up some ground today, 3.8%. They're at $6.68. Last week I talked about a floor for them being maybe $6, and that seemed to have held kind of true. Affirm up 3.8. I can't see how this company keeps running like this. It's got to eventually have a point where people take profits. I know it did a couple days ago, but they didn't take very many profits for this type of a rapid rise like that. Wow. There's a few REITs in my portfolio, like ticker symbol LAND. That's one of my favorite REITs. I know with LAND. I know the housing market is starting to contract. So REITs long term probably won't do too well, but this ticker symbol or REIT land, it only does farmland is what they invest in. So land will always have its value, kind of like gold, and farmland, especially if the farm gets bought out to build homes. I think it's a good investment for a REIT. Another high conviction of mine is Palantir. I've got Palantir in the portfolio. I love this company. I think it's got a lot of room to grow. I've got Disney as a stable company in the portfolio. It really hasn't moved a whole lot, especially this year. Let's see. Actually, I'll just open it up and look. A ton of Tesla. I do have some Robinhood shares in here. I've got a bunch of SoFi. I love SoFi. I think SoFi has got a big future. I've got the Metaverse ETF. That ticker symbol is META, META. Because I believe the Metaverse is going to be the future of the internet. And it's a lot of tech companies, and there's a lot of Metaverse companies that are still private. Churchill Downs, it's been a good performer. PayPal, Square, and of course I've got Bitcoin, Ethereum, and Cardano as cryptocurrency holdings. Let's see what else is in here. Toast is in here. Enphase is in here. There's a little bit of Aapl, a little bit of Lemonade, a little bit of Snowflake. You see, I'm a lot of tech. Also, Marine Max, because I love the boating industry. It's been doing real good. HZO is Marine Max. That's been pretty flat. I also have Brunswick in here, which is a boat manufacturer. Marine Max is a boat dealer. So that's been trading flat in here. I had Tractor Supply, but I think it's run its course. I got that in last year, earlier in the year. That's TSCO. I think it may have run its course, and it might be done for a while. Let's see. I got a little bit of LegalZoom, Fiverr, Yum, ticker symbol YUM. This is the company that owns Taco Bell, KFC, Pizza Hut. You know, who doesn't like tacos, chicken, and pizza? RK a little bit, Vanguard, Camping World, even though I think Camping World's run its course. Camping World, like in the boating, it sells RVs. CWH. And I think it's run its course too. Let's see, anybody else in here? Yeah, still got some workhorse. This is one, SPIR, satellite company. That big explosion right there was a shocker to, because I don't look at the stocks every day. That I don't like to see the fluctuations as much, but I'll look at definitely the tickers and charts and stuff. But so Palantir. Sorry, I missed that question. I grabbed my phone and started looking at the portfolio there. Palantir need to raise money this year. Might need to raise money this year. They paid off all their debt. Does not concern you as an investor. No, it doesn't. See, SoFi just raised over $1 billion, and because of the terms of that deal, SoFi gets to use $1 billion for the next 5 years before they either have to pay it back or it will convert over to shares of the company at a 22.41 share price. Well, SoFi shares have gone up, but they're not 22.41 right now. They're 18.92. So I think investors, and it's kind of funny, I made the video, I publish it, and then it shoots out of its wedge there. But I think investors didn't quite understand the money that they got. But then once they realized, oh wait, yes, it's dilutive, but they get to use this money for 5 years without paying a cent and without diluting shares right now. So it's not dilutive for 5 years, and it may never be dilutive. It could be paid back. I think Palantir could be in a similar situation because they bought all that gold, right? And they have that gold sitting there. They could use the gold as collateral to raise money and not dilute shares at all. That's a possibility. That's a neat way of financing growth without having to bother shareholders. And gold has its own separate type of tax system. It's not taxed as a collectible, which has I think 28% tax rate, I believe. So yeah, I think that's right. Yeah, $50.7 million. It's not $1 billion. That's right. So it's not a fair comparison, but it's still something that they could use to leverage. Maybe that could be that could help Palantir to get a favorable loan, just like SoFi did. What SoFi didn't have to use, collateral. I mean, they had to put up shares that potentially the loan officers would get in exchange for lending the money out, or SoFi just pays it back without dilution. So this $50 million could be collateral for $1 billion without diluting shares. I mean, I could just see a similar deal for Palantir like SoFi just got. And the gold just could be collateral. It could not be. But that's what I think. If they have to borrow money, which I'm not sure if they'll have to borrow or not, because their cash flow, it's decent. It's okay. I mean, just hop in there. PLTR and go open up the financials. I'm personally a Palantir bull. Think it could easily be $1 trillion in 10 years. That being said, I think right now isn't the best time to enter, but I'm no Nostradamus. 20 years, yeah. Yeah, Palantir is not a short-term play, definitely. My last video I did on Palantir, I specifically said Palantir is a long-term play, and you can't, there's nothing short-term about Palantir. If you want to go find short-term companies, go watch and pick some IPOs or something, or some crazy cryptocurrency of the day. But long-term. So cash flow 2020, I wish it had 21 on here. Almost $1 billion financing, 14 million investing, 252 million operating. Income 2020, revenue at $1.09 billion, net income loss of 1.1 billion, profit margin negative 107%. Okay. If Palantir were to cut back on their stock-based compensation, I really think they could be positive and actually turn a profit in a few years, in maybe a year or less, if it didn't have so much stock-based compensation. I think they need to stop doing so much stock-based compensation. I mean, it's okay when you're starting to do stock-based compensation, but not for this long. So Q1 2021 price to cash flow rating ratio. Okay. Well, that's what I think on Palantir. I think it's a long-term hold. I think it can get uh, $27 to $28 a share. I think is its ceiling right now. I know I see YouTube videos all the time saying Palantir to $100, Palantir to $200. No, hold on, slow down, not yet. I think right now a ceiling would be $28, $27 right now. It's got to grow some more. All right, I just want to see what the losers were today. Because the market, if I look at this chart right here, it shows that most of the market was either up 0 to 2%, or they were down 0 to 2%. Just a hair more being up than down, but that's most of the stock market today was between, I mean, it's flat, between down 2% and up 2%. Now, as far as down here, grow generation, that's a hydro farm. Those two are your cannabis. They were down 11.9% and 7.8%. Delta Air down 5.7. Truly, oh, a bunch of cannabis here. 5.5. Spirit Airlines. Arrival, that's a electric bus company. They were down 4.3. United Airlines, a bunch of airlines here. Let's see what else. American Airlines down 3.3. Bunch of airlines down. I wonder what's going to happen with airlines. Smile Direct Club has been a, I'll say, momentum stock. If you go to topstonks.com, oh, come on. Why won't it load? There it goes. So I can use this right here to see what Wall Street Bets is talking about. And that Smile Club Direct, that's been like in the number 4 place this whole week. And then today, seeing Smile Club Direct lose some money, 3.3. I guess they were taking profits. Let's see, anything else good here? There's been a few restaurants, Cheesecake Factory, Texas Roadhouse, bunch of airlines. Hilton Hotel down 2.6. JP Morgan actually beat on their earnings today, but they were down 2.6%. I think because of the credit that they had to raise. AutoNation, Alaska Air Group, bunch of airlines and restaurants. Dave & Buster's. Lucid Group is down 2%, but they're at $22.59. I think they may have hit a ceiling here. I mean, they can get up to, I think it's got a ceiling too, like Palantir at like a $28 for the time being. They need to deliver. Let's see, anything. Another hotel, Marriott, Caesars, that's sports betting, gambling. Cracker Barrel, another restaurant. Poor Southwest Airlines, they were down 1.7% today. I don't know what's going on there. There's several stories. I don't know which one to believe. All right. Well, a lot of restaurants, a lot of airlines, hotels, cannabis down today. So we can see a theme there for today forming. All right. Any other questions? That's about all I have to talk about today. I think I covered everything I wanted to. If you have a question, let me know. If not, I'll end the stream here and say good night until tomorrow. Tomorrow's the 14th. We don't have any big catalysts for the rest of the year. Our biggest catalyst for the rest of the year was today with the CPI data. So inflation is still going up. It did slow a little, and it did kind of meet expectations on some ways, but it's still going up. So it's not going to be as transitory as they said during the summer. We do have small catalysts for the rest of the year for individual stocks as we go through earnings season. So earnings season will probably show that input costs are rising at companies. But that's it. All right. Well, thank you so very much for watching. I do greatly appreciate every single one of you. And I love, love, love the communication and the questions. It's good to do that. And that's what this stream is for. This stream is for you. So if you ever have a question, feel free to leave the ticker symbol and your question in the comments, and I will make sure to answer the question the best that I can. Always be straightforward and honest. So thank you very much for watching. If you could, smash that like button, share this video, and make sure to click subscribe to join our family of investors. I greatly appreciate every single one for watching, and I appreciate every single question. And if you're watching the replay of this, you can leave your ticker symbol and question in the comments. We'll go over it during the next show. So thank you all so very much for watching, and I will see you in the next video.